Today, I'm going to talk about a big headline, and that's that Fannie Mae just removed the requirement for a minimum credit score for their DU underwriting system. And basically, the message has been across the internet that credit scores don't matter anymore. And I've even seen industry professionals talking about how, like, this is going to this is going to be really bad for the market. And haven't we learned anything from 2008? You can't just be giving out loans to just anyone with the pulse. But that's not what's happening here. And so a lot of people are wondering, like, how is this change going to impact home buyers? So in this video, I'm going to break down what Fannie Mae and Freddie Mac actually are, how they're relevant to the average home buyer, and why this change won't really do what everyone thinks it's going to do. Fannie Mae and Freddie Mac are not lenders. They don't give you mortgages, and they basically are the agencies that write the rule books for the standard conventional loans here in the US. Think of them as like referees of the mortgage world. Lenders have to follow their rules, and if the loans fit within their requirements, those loans can be sold to Fannie Mae and Freddie Mac, and this helps keep interest rates competitive and keeps the mortgage world moving. Each of Fannie Mae and Freddie Mac have automated underwriting systems. So for Fannie Mae, it's called DU, which stands for Desktop Underwriter, and for Freddie Mac, it's called LP, which stands for Loan Product Advisor. Now, these are basically just computer programs that we have to run each loan file through, and it tells us whether or not it meets the conventional loan guidelines. So what it's considering is all the details of your income, assets, credit, and debt. So this is things like how long you've been at your job, how much you earn, what your credit score is, what your credit history is, are you making your payments on time or not, how much debt do you have, what kind of debt do you have, like all of these things, it compiles together and it tells you whether or not you meet the loan requirements. Until now, Fannie Mae required a minimum 620 credit score for a conventional loan. But the change they made basically states that DU can approve a conventional loan with no minimum credit score. In theory, because here's the important part. Like I mentioned earlier, these underwriting systems are not just looking at your credit score. They're looking at your income history, they're looking at your income amount, your credit history, your on-time payment history, all that stuff, in addition to the credit score. So even if that minimum credit score is removed, DU still has to look at all of that other data to ensure that the loan is an acceptable risk. And most of the time, people with really low credit scores, unfortunately, have other blemishes that will show up on their file, and that will be a reason for DU to deny the loan. So this score removal does not mean that just everyone gets approved for a home loan now, and it does not mean that your credit history is not relevant to your ability to qualify for a loan. So let's say you're one of the rare cases that maybe has a 600 credit score, but your file is squeaky clean in every other area. You have a long job history, you have solid income, you make a lot of money, you have a large down payment, but maybe for whatever reason you have a low credit score, maybe you just don't have a lot of credit history or for whatever reason, right? The thing is, individual lenders, even though they have to meet those Fannie Mae requirements, still offer pricing based on your credit score. So unfortunately, on a conventional loan, the way loans are priced out, over the last several years and even longer, is that if you have a credit score, let's say at 620 or sometimes lower, that conventional loan is going to offer you a substantially higher rate than someone that has like a 700 credit score. Usually 680 is kind of the sweet spot that you want to be at on a conventional loan. And so the rate is going to be substantially higher for that person that has the lower credit score. Now, the other thing is anyone that gets a conventional loan who puts less than 20% down pretty much always has to pay what's called private mortgage insurance. Now, the private mortgage insurance on conventional loans are heavily credit score based. And so anyone below that 680 gets heavily hit on that mortgage insurance as well, that monthly fee that's included in their payment. And unfortunately, unless you're above 680, that monthly mortgage insurance goes way up. And sometimes it's just an unrealistic amount for a buyer to have to pay. So even if someone with a lower credit score was approved, the rate and the PMI would be so much higher that it wouldn't be a realistic option for them, and there would be likely better options for them to choose from. And mainly it's going to be an FHA loan. These programs are way more forgiving on the credit score, and the mortgage insurance is not credit score based. It's basically the same for everyone. It changes a little bit based on what you're putting down. But for the most part, regardless of your credit score, if you qualify for an FHA loan, you get the same monthly mortgage insurance amount as anyone else. And it's called MIP instead of PMI. It's called mortgage insurance premium, but it's basically the same thing. So if anything, this update maybe just changes an arbitrary rule, but it's not really going to affect the way lenders operate, and it's not really going to affect the way loans are offered to buyers. It just isn't going to impact like 99.99% of home buyers who are interested in using a conventional loan. You still have to meet the minimum requirements on income, job history, down payment, all that stuff. And so that credit score requirement is only going to be a small part of that. Now, the good news is if you have a lower credit score, that doesn't mean you should just give up on trying to buy a home. There are resources for you to help improve your score, and maybe your score is higher than what you thought. And a good lender can help you with all that. So, if you need work on your credit, the best thing to do is honestly just get with a reputable lender so that they can look at your scenario, see what on your credit report is hurting you from qualifying, and help you improve that score. Sometimes it's short term, sometimes it's long term. But the first step is just having a lender determine what needs to be done to get you in the best position to be able to buy a home. And if you need help with that, I'm always here. My contact info is in the description. And if you're not quite ready for that, but you do want more helpful tips, please consider subscribing.